You're welcome back. Still watching Business Incorporated here on Channels Television. We head to South Africa, where this week we did see that fall in their GDP for the third quarter, a worrying development, but I guess not so surprising. Well, to help us elaborate on this and give us some of the implications, joining us from Johannesburg is Dr. Elna Moolman. She's the head of South Africa Economic Research with Standard Bank. Apologies for your name, Dr. Moolman. Please forgive me. Welcome to the program.
Good afternoon.
So obviously a worrying development we saw there for the drop in the GDP of South Africa and the threat of recession. How real is this threat?
It is a real threat. So we unfortunately have a number of headwinds. Some are international. So if I think about our terms of trade, in other words, export relative to import prices, they have fallen by nearly 20% from their recent peak. And of course, along with less supportive prices, we have weaker demand for many of the products that we typically export. So there's an international component to it, but there is also a domestic component to it. And this is the part that we're most concerned about, and that could then underpin a recession if we have another contraction in the fourth quarter.
So we saw that the first and the second quarter were positive, and some people were surprised when you look at some of those factors that hit the economy. How come, I mean, did we miss those magic touch that were used in the first and the second quarter?
Yeah, I think unfortunately the context is that we had a sharp decline in the fourth quarter of last year. Now that is when our electricity constraint was particularly severe. And so after the decline, it wasn't that difficult to recover it. We should really see it as a recovery in the first and second quarters. But then in the third quarter, not only did we have a persistent electricity shortfall, but our railway and port infrastructure has also deteriorated quite significantly. And so that is now also becoming a binding constraint to production, because we struggle to transport and export the products. And these are the things that we're really concerned about. But there are also other factors. The agricultural sector, for example, contracted by almost 10%. And again, it's a combination of not having enough electricity. So it's a problem from an irrigation perspective, but we also had avian flu, foot and mouth disease. And so it's really just a number of factors that conspire to give us a very weak third quarter.
So I don't know, have these things changed, or do you see them still determining a negative output in the final quarter and this quarter?
No, so the fourth quarter, we're probably going to see even a worsening at the port situation. So we have severe congestion now that is becoming a real constraint to exports, and it's even worse in the fourth quarter. The areas in which we're seeing some improvement is on the electricity side. So we have two things happening. One is our local electricity provider, Eskom, is increasing its capacity. In other words, some of the big units that couldn't produce earlier is now coming back on stream. So that is helping. And then we've seen rapid increases in private sector electricity generation. So roughly 5 gigawatts of solar power now. So that is at least helping at the margin.
All right. So has the government said anything, about maybe some drastic or intentional moves that could actually help the economy, especially when you look at your agriculture sector? Well, thank God that the electricity supply is improving, and then also looking at your mining, which is a major one for the country. Any major steps?
So the government is working with a longer-term plan. So there's no quick fixes, for example, for the electricity constraint or even for the logistical one. You can, at the margin, improve it. But we should really think of this as a multi-year intervention to radically transform these sectors. So electricity, for example, used to be provided only by Eskom. And now, like I've mentioned, we have a massive private sector generation capacity as well. And that comes from government intervention. interventions, from reforming the policies that there's no longer a constraint on the private sector to produce electricity, which we had in the past. And we're seeing something similar on transportation. So unfortunately, it's not going to give us overnight improvements on the operational side, but again, significant transformation in the sector. Whereas we previously had a monopoly on railways and ports, we're now getting in significant private sector participation, which is really the solution out of this. The state simply doesn't have the capacity or the finances to fix these problems on its own, and it's therefore down to, fortunately, a very well-developed private sector to assist in alleviating these constraints.
So do you see that a threat of recession catching up with the economy in the fourth quarter?
So we still expect marginally positive growth in the fourth quarter, but we are monitoring the data releases very closely. I'd say I'm a little bit more optimistic about next year's growth. So where this year will probably end up at roughly 0.5% of growth, we could have perhaps 1.5% growth next year if we have then the ongoing improvements on electricity, but also perhaps lower inflation and lower interest rates to provide a little bit of support to the economy.
All right, thank you so much for sharing your perspectives. Dr. Elna Moolman, the head of South Africa Economic Research with Standard Bank.